Peter Rose, Longwood Currency Trading. It's a beautiful summer day, so I thought we'd come out here and do this video on why not to follow a strategy in your trading. I think that's just going to cause you a lot of problems. It's going to lose you a lot of money. Don't follow a strategy, learn how to trade. Well, before I get into that, I want to show you our latest construction project here at the house. There's the bow dog. And those of you who have seen my videos before, there used to be a big bush here, right? And so we've dug that out because we're going to put a deck in over here and to change the entryway to the house. I had a strategy for that, but that didn't work out when we had folks come over who actually know what they're doing as far as how to do a deck and dig out an electrical line that's there and what order things should go in. There's an order that those things should go in, and that's the strategy, but it has nothing to do with building that deck. Now, I don't know what experience you have in your life as to what you could relate to that, but I think that's a good example, is that you can have a strategy for how you're going to build the deck, but that has nothing to do with actually building the deck. I want to have some posts and pilings. I want to have X amount of lumber to do this. Are we going to put railings up? Are we not going to put railings up? Are we going to screen it in? I mean, there's a strategy involved in what you want to do, but that's not building the deck. The strategy is the easy part. It's the trading itself that becomes very problematic if you don't know how to trade. I thought I'd come up here in the shade by the treehouse. Who's got a treehouse in their backyard? I don't know. Anyway, it's 96 degrees out, and that's pretty hot. And I'm not in any mood to be out in the sun. In fact, there's the bow dog. He's saying, "Hi, Bo." Okay, come on back down here. The last video I did, he was out with me, and he ended up going out. He heard the mailman go by, and whoom, he was gone after the mailman. Hey, come on, let's go down here. All right, right there. Sit down. Rest your bones, Bo. Not going anywhere. So, strategy. You know, everybody's done a moving average crossover system, right? That's a strategy. And yet, if you follow that strategy, you learn very quickly that it's only valid if you have a trending market. As soon as you go to a chop or a ranging market, psh, you're gone. You can't do it. So then you say, oh, well, I need a strategy in order to trade a range-bound market. And so you develop this friggin' strategy, and as soon as it goes to trending, psh, you're gone. The trouble is that when you're gone, it doesn't necessarily mean that you lose. It means more often than not that you take your account to the wood, that you lose a tremendous amount of money. And that can be very depressing. The problem with strategies is that you lock them in to and confuse them with process. One of my course books is called Process-Oriented Trading. I have foundations, principles, process-oriented trading, and advanced solutions. So process-oriented trading is right up there with the importance of the material as it becomes more complex. And process trumps strategy. In any endeavor that we go into, building a deck, for example, you have a strategy. You have to have a strategy. But you can't confuse the strategy with the thing it is that you're trying to do. The strategy is not the roadmap. The strategy is how do I prepare to get ready to get from where I am right now to Chicago? And am I going to take a train? Am I going to fly? Am I going to drive? Am I going to walk? What am I going to do? What do I got to wear? So the strategy is involved around all the kind of things that you do in order to set the groundwork for success in the endeavor that you're going to take. But you're not going to say, my strategy is to fly Southwest Airlines and take it out of Boston and go there. Because that strategy would have to change, right? We're looking at doing some flights now. I was going to go out Southwest, but I don't want to go fly out at 5:40 in the morning. in the morning. So we're going to go to a different airline that offers a different flight times. So you can't, if you spend your time doing what a lot of these folks are suggesting and you're back testing, you're picking up, oh, I'm going to do this engulfing candle pattern and I'm going to back test it. That's a strategy. And what you're going to do is you're going to try to replicate the results of that strategic analysis. You're going to try to replicate that in real time. And what you're going to find is just like the airline thing. It's great. I'm going to fly, but the strategy can't include, oh, I'm going to fly this airline out of this airport at this time, because that could change. And so if anything that you're doing in trading is I call them an action-based strategy, then you're wrong, because you're going to be locked into that and you're going to just try that, and it's going to be the wrong time to implement that particular strategy because, I don't know, the stars are in a different configuration or you have hemorrhoids or whatever the thing is. It ain't going to work. Oh, maybe it will work. Maybe it'll work twice. Maybe it'll work a half a dozen times, such that you get so confident in that strategy that you dump all your money into it and away it all goes. That's what happens. You cannot trade based on a strategy. I don't care what these people out there that are teaching this stuff, they didn't have that when they were learning how to trade. They either got lucky and hit 200 to 1 leverage and doubled up 5 or 6 times and took their $2,000 or $3,000 account to 6 figures. Well, yeah, it's possible. You take $5,000 account and you double that up, 6 hops at 200 to 1 leverage, and you'll get there. So that's not trading. That's just luck. And somebody who gets the trade size, that you know how to tell somebody who's like that? They start preaching, don't take more than a 1% risk on your account, or limit your risk to, sometimes I limit my risk to 0.5%. You know why they're saying that? Is because you're trading with $100 or $200 or $300,000 account, and a 5 pip move on a $200,000 account is $1,000. A 5 pip move. And so, what are you going to do? You don't want to risk 2% of your account, 2% of a $200,000 account. So you want to risk 0.25% of that, because then you don't lose the money. Because they don't understand how they made the money, so they come up with these ridiculous rules, risk to reward ratio, and this stupid don't risk more than 1% of your account or whatever. It's just stupid. It isn't done by people that learn how to trade. It's done by people who are trying to protect what they have. But you've got to get what they have before you implement those types of rules. And then why would you do that? If you really understand your trading, what's the difference between trading 2 mini lots and a $200,000 account? There ain't no difference. Well, there is a little bit in the implementation, and I've mentioned this many times, is that as you get into the larger accounts, you implement a little bit different risk management structure, and you go into some staging. And that reduces the net profit that you're going to make, but it increases the number of lots. And if you know when to do your staging, you end up making a hell of a lot more money. But it's an advanced topic. That's something that I deal with in my advanced solutions, the fourth course that I've got. So yeah, I mean, it just doesn't make any sense to be trading 5 minis and talking about staging or compounding or risk-reward ratio of 1 to 1 or not risking more than 1% of your bank. I mean, what the fuck are you going to do with 2 mini lots and not risking more than 2% of your bank? When they started out, if they had a small account, they were shoving it all to the center of the table. I'll guarantee it. If you've played any poker at all, you play no limit or table stakes Texas Hold'em. You're gonna bet $10 or something. You gotta be willing to go for it. But you gotta know what you're doing. And if you base what you're doing on a strategy, you're screwed. You really are. So please think about this, because it's such a critical thing. I see folks that email me and I'm in conversation with, it's so hard to discuss with them in an email or something how you change this from being strategic in your thinking to using a strategy that then becomes a process-oriented method of actually trading. I mean, that's really what taking a course is all about, or doing some mentoring or consulting or something. And everybody says, "Oh, you know, I don't want to spend any money to do that." Well, fine, don't spend that money. You know, once you get up and you're trading a $30,000 account, you know, 20% of that, $6,000. You know, and that's just on a $30,000 account. Where are you going to start a business where you can make your money back from your investment in the business in less than 5 years? You start a yoga studio. It's going to take you 5 years before you're net over your cost of goods amortized out over that period of time, and any loans that you have and all that other shit. In currency trading, if you get a good start and you start with the mini lots, you might have to reload that mini account 3 or 4 times. So you've got, I don't know, $800 or $1,000 of reloads. And so it costs you $1,000 in losses in following directions and stuff. This is if you really don't know what you're doing, in order to get that squared away, so that then you become profitable. And then once you're profitable, you have to become consistently profitable. And once you're consistently profitable, you have to work toward having a good win-to-loss ratio. And once you have a good win-to-loss ratio, you can combine that with your average win value and your per-trade expectation value, and you are all set then to trade that large account. But until you have all those pieces lined up, and none of that has anything to do with strategy, that's just how you learn how to trade. So if you're wasting your time learning strategies and doing frickin' back testing and trading soybeans and S&P futures or the Bund or something, and then you think you're going to trade currencies because it's diverse and you see all these guys trading these different things, you're kidding yourself. You really don't know what you're doing. When you go to get your driver's license, do you go to get a CDL license, or do you go to get your learner's permit first and then your basic driver's permit? Is a CDL license the first thing you go to get? Is a hazmat certificate the first thing you go to get? No. Why? Because you don't have the skill, you don't have the background in order to do that. And yet that's what all these people are trying to teach you. And they're teaching strategy, and they shouldn't be teaching strategy because strategies don't work. Thank you. And I'm sorry for the rant, but that's just the way it is. Please check my bio in the About section to see who I am and what my background is that gives me the right to talk about this stuff. Because otherwise I'm just some horn blaring at you over the videos, like so many of these other guys really are. They don't know what they're doing. And the ones that do know are just quietly trading on the side and offering their advice, and they're not offering you the magic pill, and so you don't want to listen to them. That's why my channel doesn't have very many subscribers, and I'm not encumbered by crazy questions, because I make sense, but I don't offer the magic pill. I offer a reasonable way to make a lot of money. I had 3 positions today, and I made just under $2,800 in 3 positions. It took me 45 minutes. Okay? Did I have a big account in trading that? Yeah, sure, I had a big account. But I was hitting 6 and 8 pip profits each time. So that isn't anything that I wouldn't expect anybody could do. Somebody with a couple of mini accounts, you might have made, if I was trading a couple of mini accounts, I might have made I don't know, $20 on that. Yeah, you just have to have more money. But behind the money can't be strategy. It's got to be process-oriented trading in order to be successful, regardless of the bank size that you're trading with. Don't get things screwed up in the wrong order, okay? And you'll be far more successful than you could possibly imagine. There's so much opportunity in the currency markets. Oil doesn't offer it. S&P futures doesn't offer it. The stock market sure doesn't. Penny stocks don't. Wheat, old tires, doesn't make any difference. You go to my website, longwoodcurrencytrading.com, go to the currency trading menu page, and see the 7 reasons why I think currencies is the best way to go. And I come out of 40 years of real estate investment. I think I know a little bit about finance. So watch the videos and try to ferret out where I'm talking about process, but you won't ever hear me say, this is strategy. I have a strategy, but I know how to implement that strategy, and it isn't trading. Okay. All right. Thanks for watching. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.